Hey, if you're trying to create financial projections for a manufacturing company, whether you are a brand new startup or an existing manufacturing business, and if you're trying to just do internal cash flow planning or trying to raise capital from an investor or a lender, this video is going to be perfect for you. We're going to walk through our manufacturing financial projection template, which is linked to in the description of this video below, and show you how to create projections for your own manufacturing business. My name is Adam Hoeksema, and I'm the co-founder of ProjectionHub, and we've helped thousands of companies create financial projections for raising capital and for internal planning. So let's jump into the spreadsheet and I'll show you around. So the first thing you need to know is that any cell throughout the spreadsheet that's highlighted in blue is an assumption that you can change without breaking something in the spreadsheet. And so I've got this kind of pre-filled out with some assumptions. I'm just going to show you how you can do that. So we've got a projection start date here of January 2022. We are assuming for this business that there's an equity investment of $400,000. We've added a building for $1 million that we're assuming. So you'll notice here that the equity investment we have invested in month 0 of operation. So we're saying basically we need that to get started. We also need the building and the equipment and the furniture to get started. So we're saying all of this is in month 0. We need it immediately. Now, if you wanted to add, future equipment, you could do that. You could add another line down here. Let's say you're going to do a second line of equipment. You could add that here, and you could put that in month 13. Maybe that starts out year number 2 of your projections. You would be able to do that here in the spreadsheet. And what you'll do is you'll just enter the value or the cost of the building, the equipment, furniture, that sort of thing. And we have a salvage cost over here, and this helps calculate your depreciation expense in the projections. Now down here we have entered in a couple of different loans. A mortgage loan for the building at 80%, so $800,000 of that $1 million building at a 5% interest rate over 360 months or 30 years. And then we have equipment of $500,000, or an equipment loan, I should say, for $500,000 here at a little bit higher interest rate over 84 months. So that's really your kind of startup costs and how you're going to fund those startup costs on this first input assumptions page. Now let's jump into how to project revenue for your manufacturing business. So this is a very simplified model, and we have, if you end up buying one of our templates, you have access to a few different versions. And what I'm walking you through right now is our simple manufacturing template. But what you're able to do is enter in a number of units sold by month. Here you can see we've got 25,000 units sold by month 5. And just for reference, you're able to see here your annual number of units based on the projections that we have up here in this row. And then down here's where we can kind of get our product mix. So here we're saying 5,000 total units, but what's the mix of those units? So we've got a skin care product, a hair care product, a bath and shower product with different price points. And this is the price that we're selling. This wouldn't necessarily be the retail price. This is the price that we're selling the unit to perhaps a wholesale. Or if you are doing a direct-to-consumer business and you're manufacturing the item, then you would want to put in the retail price right here. And then you have your direct materials cost per unit, and then an average labor in minutes to produce the item. So we have you put in the number of minutes, and then we kind of calculate the labor cost component on the back end. So you put in the number of minutes, and this will give you a margin. And then here's where you can break down what percentage of that total 5,000 units here is the skincare product. Well, here we're saying it's 15% of the units sold are skincare, 50% are hair care, 35% bath and shower. And you want to make sure that this isn't something greater than 100%, right? You would be able to, if you made that 45%, for example, you're at 110%. So that's not realistic, right? So we want to make sure that that all adds up to 100. Now you have the ability to increase here kind of an annual price increase that you can assume in the model for both your price to your customer as well as cost of goods sold price or cost of goods sold increases on your end as well. Now here we have the average order quantity. So this is kind of assuming more of a wholesale type of operation where you're selling at least 50 units at a time, not one or two units in a direct-to-consumer model, but you could put one there if you wanted to. So we've got 50 in there, and this here is going to show you the inventory maintained as a percentage of next month's cost of goods sold. So it's kind of a mouthful, but basically that allows us to understand in the model how much inventory you should make sure you have on hand and project out your inventory costs. So we have the ability to put in a starting inventory there as well. And this does then, based on those simple assumptions, will calculate your starting and ending inventory numbers for each month. Now on the labor cost side, we had put in how many minutes it takes to produce something. So this is going to show you here the total labor hours needed for production, because we know it takes 1 minute or 2 minutes or 10 minutes of labor to produce the unit from the table above. This will calculate how many labor hours you need. And so based on that, you'll be able to kind of figure out, okay, how many employees should I have to make sure I can actually fulfill those orders, right? And you can put in these assumptions. So your average pay rate, a growth rate, average weekly hours per employee, and that sort of thing. Now, down here, you will see the total projected revenue. And that's really it in this simple manufacturing model on the revenue side. Jumping over to our expenses here. We're going to zoom in just a little bit. So we can add an annual inflation rate for our operating expenses, and you can see the kind of standard common operating expenses that we have pre-populated in here. You've got things like rent, insurance, point of sale, systems, transaction fees. So this would, for example, let's say you are doing a direct-to-consumer sort of customer, and you accept credit card. The credit card fee might be 2-3%, might be 3%, but let's say some people pay you via ACH or a check or some other way, not credit card. So what we put in here is 2% of total revenue as a transaction fee. That could be a credit card fee. We could change that here. We have rent in here, but also you may not need rent because you own the building. So just to show you, and wanted to make sure that you didn't, if you do have rent, that you don't forget that. But in this example, we did enter in that we owned a building as well, and so you may not need rent also. And you can add additional expenses down here, and again, you can select whether the expense is a fixed monthly dollar amount or a percentage of revenue. When you're entering in the percentages, make sure that you enter it in as that like 0.02 equals 2%, so 0.02. Make sure to do it that way. And then you can enter in, this would be like salaried positions. So managers, supervisors, office assistants, office workers, that sort of thing. Maybe, a finance person, if you have an accountant on staff, that sort of thing. That's what you'd want to put in here, because our production labor was already accounted for in the input revenue tab, as we saw earlier. And you have the ability to add more jobs here. You can pick what month they start on. So right now we have them all starting on month 1, but if you say, well, we know we're gonna need to add this position in year 2, we could have them start on month 13. So that gives you some flexibility there. Now, based on that, we have everything we need to enter it in to be able to see a full set of projections. I'm going to show you on this at a glance page. You can see some different tables, profit and loss at a glance, some different graphs, some nice summary data here, use of funds, how much funds were required to get started, and how those funds were used. And you can see a number of different graphs and tables as well, and some key ratios. Now, jumping over to some of our financial reports. So again, if you are working to get a loan or raise some investment, this may be what you're needing to ultimately send to those potential lenders, your projected income statement. So you can see your projected income statement here, your EBITDA, also your projected cash flow by year, projected balance sheet for each year, and then the same reports, income statement, cash flow, and balance sheet for by month for all 5 years. So that's it. If you have any questions at all, leave a comment down in the comment section of the video, and we'd be happy to follow up with you or reach out to us directly at support@projectionhub.com. Thanks.